Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 2nd of February 2023. Alright everyone, let's get into it. So that Zhejiang public testnet is now officially live. I covered it obviously over the last couple of days, and yesterday I said there was about 3 hours left till it went live. Well, now it is live and it is finalizing, so it seems everything went quite smoothly. There's all these links here which are part of the tweet that Barnabas put out, which I'll link in the YouTube description below for you guys to check out, of course. But if you go to that Beacon Chain Block Explorer website for the Zhejiang testnet, you can see the progress happening here. It seems to be going very, very smoothly. From what I've seen, there hasn't been any issues at all, which is exactly what we wanted to see. And I did say that I didn't expect there to be any major issues. This is not like testing the merge. This is definitely a lot easier to do than that, and a lot less things can go wrong than that. Nevertheless, we do test as much as we can here. And there's also a bunch of other links, like you can go to the Launchpad website on the Ethereum.org website to become a validator of this testnet if that's what you're interested in doing. There's GitHub repos, all that sorts of stuff that you can check out as well, which will be linked in the YouTube description below. But we are potentially less than 2 months away from withdrawals being enabled. I mean, given that the test nets are going so well, the dev nets have gone so well, and it seems that we've ironed out most of, if not all, the kinks that needed to be ironed out, I'm pretty confident to say that with 90% plus certainty, we're going to see a late March fork here for the Shanghai mainnet deployment. So early April could still happen for any number of reasons, right? But everything seems to be going quite smoothly, and the devs definitely want to have this deployed sooner rather than later, and so does the community. Obviously, everyone's really, really, waiting on the edge of their seat for withdrawals to be enabled, because there are so many different, theses around what is actually going to happen post withdrawals, and I've given plenty of my own, but there are so many out there, and I'm just very, very curious to see who's right, who's wrong, what's going to happen to all that ETH that was staked, like how much is actually going to be unlocked, how much of the rewards are going to be sold, all that. I'm sure there's going to be dashboards to track all of this created by community members as well. That's what I'm definitely most interested in and paying attention to, but I think everyone just wants to get this over and done with so we can move on to the next most exciting upgrade, which is obviously EIP 4844, which should hopefully come this year as well, in probably Q4, I would say, and that's proto-dank sharding for those of you who need a refresher there, which is obviously the major upgrade that everyone's looking forward to, because it's going to reduce those roll-up costs by 10 to 100x, and then obviously set the groundwork for full dank sharding later on there. But yeah, as I said, all these links will be in the YouTube description for you to go check out. Alright, so I'm featuring Tony again from the MEV-boost.pix website here, and Tony's actually an Ethereum researcher. That's, I guess, his full-time gig, and he does these kind of websites on the side, but I've covered him a lot on the Refuel lately. It's because he's just been a machine getting this MEV-boost.pix website up to speed and updated as much as possible to show us the latest MEV-boost related metrics. Now, this current one was done in collaboration with Hildobby, I believe, or he just special thanks to Hildobby here for open sourcing the heuristics to map validator public keys to entities. And you can see here on the MEV-boost.pix validators section that the section is now populated. So basically it splits out the total validator market by identified entities. So obviously Lido and Coinbase and Kraken and Binance are the top validators here. Others are unidentified staking entities or solo stakers, and that's at 30% right now. I think the last estimates that I saw showed solo stakers at more like 20%, and then that 10% is unidentified. But it's kind of funny, because when you're thinking about solo stakers, it's like you have to define exactly what a solo staker is, right? Like, is it just an individual at home with their setup solo staking, or is it a company that's decided to stake on their own instead of using some other service? Are they considered a solo staker? So I think there's no real kind of hard definition there, but my definition of it is more on the individual level than the company level. Obviously, some people will have companies for tax purposes, but if there's like a corporate that has tens of thousands of ETH that they're staking, I don't know if I consider that to be a quote-unquote solo staker, but other people would, right? So there's no hard definition here of what a solo staker is, but I think those individuals staking from home, like obviously myself and a lot of you guys out there, I would consider those to be the true solo stakers. But now I'm getting into semantics and trying to define things here, so I'm going to leave that one there. But yeah, by splitting up the total validator market here in terms of like MEV boost, we can then go down into total slot share. So this is the total, I guess, like percentage of slots, aka blocks, that are proposed by each entity. The average MEV boost proposer payment since the merge. You can see here it's quite variable, right? It depends on the market activity at the time, and it depends on, I guess, competition between different builders and relayers, and just what exactly is happening, and what profit opportunities there exactly are. And you can select all the different validator entities that you want here. Right now, it's just defaults to Lido and Rocket Pool, but you can select the other ones as well. Then you can see blocks per validator, which I guess maps quite evenly to the percentage of the validator market that each entity has. Obviously, Lido number one, Coinbase, Kraken, Binance, and the rest of them you can see here. And then validator overview since the merge as well, just a tabulated format of that other data there. So great to see this update here on the MEVboost.pix website. But going back to my little tangent from before about identifying or defining what a solo staker is, I don't know if it's actually something that we need to do, but I'd be curious to know what you guys would define as a solo staker. Now, let me know in the comments on YouTube or in the Discord channel. But as I said, I more view solo stakers as those individuals who manage their setup, even if they have a lot of ETH. Like, there's for sure lots of solo, well, I would maybe not lots of them, but there are solo stakers out there who are staking, 10,000 plus ETH, right? And they're just individuals doing that because they have a lot of ETH for one reason or another. But there are definitely companies doing that. There are definitely corporates doing that. There are definitely institutions doing that. Like, for example, let's say a financial institution, traditional financial institution, says to their customers, "Hey, stake through us. We've got our own setup." When they're not going to go through one of these existing setups, they're going to have their own setup. Do we identify them as that bank entity and split that out from the solo staker share of the market? Or do we say that they are a solo staker because they're not with any of these staking entities, right? Because these staking entities are specifically spun up to be staking entities. Obviously, Lido exists to be a staking provider, right? A staking service provider. Coinbase has their entire arm where they do staking for multiple different chains, right? Obviously, Coinbase, the company, isn't primarily focused on staking. They're primarily focused on being a centralized exchange, but they have a pretty big business unit that's dedicated to staking, right? Whereas Kraken, same deal, Binance, same deal, and then things like obviously Rocket Pool, they just focus on staking in a decentralized way. But these let's say there's a solo staker, it's an individual, he or she is solo staking 1,000 ETH on their own. I would consider that to be a individual solo staker. That would fit my definition. But then let's say that there's a company and maybe there's only a few people part of that company, and they're basically gotten together and said, "Hey, we're gonna like stake our ETH. We're not going to go with one of these existing providers," and they do that. And maybe the company isn't even spun up to just be staking ETH. Maybe it's just part of their balance sheet. Same goes for these traditional finance companies, whether that be a bank or a broker or whatever it is, right? They could spin up these things as well and do it on their own. So it's going to be harder and harder, I guess, to define exactly what a solo staker is. But does it really matter is the question that I've ultimately come to, because this isn't just something that I thought about just now. By the way, I was looking at this website not yesterday, when I saw it earlier today, and it got my brain thinking, and I wanted to bring it up on the refuel. The way I think about it is, it doesn't matter. What matters is the amount of high quality staking entities that we have on the Beacon chain. It doesn't matter that we have X amount percent of this entity or X amount percent of this entity, as long as the percentages are roughly not evenly distributed, but roughly distributed and healthily distributed, so that, let's say, no one entity has over at least 20% share of the market, and these entities are actually separate. They're not just separate in name only. They're actually logically separate, both either geographically or completely separate entities, have nothing to do with each other. Preferably, they're actually competing with each other and hostile towards each other. That's actually better, because that means that they're not going to collude, right? I guess there's a lesser chance that they're going to collude. So I think the more important distinction is number of different staking entities that have a low chance of colluding, rather than trying to define or trying to put I guess, like, very small box around what constitutes a solo staker, right? Or what constitutes a staking provider, or what constitutes a LSD. I think that lines blur a lot, and I think, as I said, what we should be optimizing for is the greatest amount of low chance of colluding staking entities across the entire globe. Obviously, we want to do geographic decentralization. We want to have client diversity. There's a lot that goes into this, right? Ethereum is really the only chain that's trying to do this, trying to tackle decentralization from every single angle at the protocol layer, which is, I guess, a major reason why I'm so excited about this stuff and why I talk about it so much. But maybe that changes your thinking a little bit. But I'm still curious to hear what you guys would think of as defining what a solo staker actually is, or maybe you agree with my conclusion that we shouldn't be trying to define it. We should actually just be trying to optimize for those, as many different staking entities as possible. So let me know in the comments or on in the Discord channel. All right, so Optimism Bedrock has a date. So the Optimism account on Twitter announced today that they are putting a proposal forward to the token house to get Optimism Bedrock deployed on mainnet. So you can see the full proposal here on the Optimism governance forum. But essentially, if this gets passed, which I mean, there's no reason that it shouldn't get passed since this is the biggest upgrade to Optimism in its history, right? They say here, if the vote passes, the Bedrock upgrade will be scheduled for execution 2 weeks after the vote passes, aka on March 15th at 9 a.m. Pacific time. So like 2 weeks, not 2 weeks from now, 6 weeks from now, which is not that far away, right? They're still making their Q1 deadline that they set for themselves. They originally set the Q4 deadline, I remember, but it's been Q1, and they're definitely going to meet that, considering this proposal is there. They only did this proposal because they're ready to deploy it, basically. So I'm super excited for this to go live. I mean, they detail what's different in a bunch of different, I guess, like on the proposal here, but also on, there's a bunch of links here to different explainers, different blog posts that you should go check out. But the biggest upgrades, in terms of the size of the upgrade, it's similar to Arbitrum Nitro, and it's definitely going to pave the way for a better optimistic Ethereum as we go through. And I think the overall summary here of what's happening is that, and they say it here, at the highest level, the Bedrock release implements a modular architecture, separating the OP stack into 3 components of consensus, execution, and settlement. And that's exactly what I've been saying that it pretty much like all of the Ethereum ecosystem is doing right now. And then obviously they say these designs borrow heavily from the engine API introduced for the merge, and as a result, an Ethereum execution client can be converted into an Optimism execution client in less than 2,000 lines of code. This is really cool because, as I've said before, these layer 2s, they want to be multi-client architecture. So essentially, if you can change Nethermind, for example, or Aragon or Besu into an Optimism client that allows you to do things like running a full node on Optimism, or running a validator on Optimism, or running a sequence on Optimism, that being able to do that without changing much code is a huge win, I think. So yeah, anyway, I'm going to link Optimism's Bedrock details in the YouTube description below. You can go check out the proposal, check out all the supporting documentation. I'm obviously super excited about this. Optimism and Arbitrum I use quite regularly myself. I get a lot of value out of both of these networks, and they're definitely, and Bedrock is definitely going to add a lot more value to Optimism. All right, speaking of layer 2s, L2Beat has a reminder here that they're about to launch their rollup maturity ranking, and they are gathering final feedback for this. So you can visit the forum here and give them final feedback. But essentially what this is it's meant to be a set of information on the L2Beat website that ranks the rollups based on their, I guess, like quote unquote maturity, which basically means based on how decentralized they are, right? Or how secure they are. And you can see a little graphical example of that here, that they've split this up into different stages, and these are the stages based on Vitalik's ETH research post, I believe, from a little while ago, where he said that these are the stages that he defines as a roll-up's path or a layer 2's path to decentralization. So you have the none category here, which means it's not a roll-up. You have stage 0, which means it's under construction. Stage 1, limited security. And stage 2, fully secured by Ethereum. And then they also want to be able to do more detailed information as depicted in this mock-up here as well. And then, yeah, there's some feedback here. So you can definitely give your own feedback to this if you want. But I think this is going to be a much needed set of, I guess, like information for users. Because, as I've said before, pretty much no rollup except Fuel V1 on Ethereum today is in their final state, or really anywhere near it. I mean, Optimism does not have fraud proofs right now. With Bedrock, that should be closer to reality, but they don't have fraud proofs at all. Arbitrum has fraud proofs, but permissioned fraud proofs where not just anyone can submit the fraud proofs. Only Arbitrum or Off-Chain Labs and I guess approved entities can do that. And they're all got like their obviously multi-sigs and centralized bridges and all that sorts of stuff. And same goes for the ZK rollups. So we need to get to a point where we remove all of that stuff. It's going to take time. It's going to be progressive. But in the meantime, we want users to be aware of these things. And I talk about this a lot, obviously, on the Refuel, but the Refuel only has so much reach. And I think L2Beat has a lot of great reach because it's a website that I've seen referenced plenty of times. It's like a central hub for this information. So I'm really glad that they're continuing to add this stuff and to keep improving the website in order to allow users to make more informed decisions about where they bridge their funds to. So yeah, anyway, I'll leave this this governance post in the YouTube description below for you to check out and give feedback on. All right, Philip here from the LiFi protocol team put out a tweet today that kind of surprised me. So he said, by now, more than 90% of MetaMask's bridge volume goes through LiFi protocol, better prices, more gas efficiency, and fewer failing transactions. And he says, focus wins. And LiFi, for those of you who don't know, I've covered them before on the Refill, but for those of you who don't know what it is, it's a bridge aggregator. It's one of those bridge aggregators. I think there's a couple of others out there, but LiFi is definitely, as seen here, one of the more popular ones. And it surprised me because I didn't realize that they were so dominant. Like, this is actually quite crazy. And it's really cool to see. I mean, this is the last 2 months worth of data. It's obviously not, not like a year's worth of data or anything like that. But the last 2 months gives us a really nice picture because it is quite variable. You can see that only, about 20 days ago, it was down at below 50%. But they seem to be on a kind of like, they seem to have like steady percentage here, and then they have spikes. So you can see if you were to draw a line over where it spent most of its time, it'd probably be between 70 to 80% of the aggregator market share here. But yeah, they've got like over 90% currently over the last few days, which is quite crazy when you look at this and see what's going on here. So I guess congrats to them on seeing this growth. This is really awesome. I think bridges in general, as I've said plenty of times before, are going to be huge. And because there's going to be multiple bridges, a bridge aggregator is going to be a no-brainer, right? It's going to be something that I think a lot of people use without knowing they're using it, because it's going to be something that sits in the background. And I doubt pretty much any MetaMask user knows that that's what they're using when they use these bridging kind of infrastructure here. They don't know that they're using this, and this is a good thing. These things that act as kind of protocol level or near protocol level infrastructure shouldn't be things that people get exposed to or shouldn't have to know about. And this goes for so many of the things that exist within the crypto ecosystem. For example, oracles, right? People interacting with DeFi, a lot of them wouldn't even know what an oracle is or what Chainlink is, for example. Especially going forward as we more mainstream, they're not going to know what this stuff is, and that's totally fine. That's actually how it should be. Same with things like the graph, right? Where it's another middleware protocol, and I'm sure even the layer 2s are going to get abstracted away as well. Like, right now, everyone goes, okay, I'm going to Optimism, I'm going to Arbitrum. But what happens when things like layer 3s get built on here and they have their own branding to it? And then it's going to be that to the point where people are using Ethereum without even realizing they're using Ethereum. And I've already seen some people bad-mouthing Ethereum before. I remember reading a comment actually maybe a few months ago now, where someone said, Ethereum sucks, but I love, I'm using Arbitrum because Ethereum sucks, or something like that. And I'm paraphrasing. I don't remember the exact tweet. And I was like, do you realize you're using Ethereum by using Arbitrum? And I don't think they did realize that. So it's funny how you can offer value as to these people on Ethereum without them even knowing they're using Ethereum. And that goes for so many things in this ecosystem. There's going to be countless of these apps that we all know and love, that we all know about, that people do not know about. They're not going to know anything about it. Just like how we use the internet. I mean, you don't know what the stack of, I guess, like Facebook is, or what the stack of Twitter is, unless you actually look into it, go through their investor presentations, go through the developer presentations, and actually dive into it. The majority, 99.99% of users have no idea what any of that stuff is, and nor should they care. And the same is going to be true for crypto, I believe. But yeah, anyway, congrats to LiFi Protocol on the growth here. It's really great to see. Now, I'm just going to quickly go through the little disclaimers here. I'm an investor in Optimism, L2Beat, and LiFi Protocol, so I just wanted to knock them all out at once instead of doing it on each of the on each of the tweets here. But yeah, anyway, moving on from that. So BlowFish. So BlowFish has been around, I think, for a little while. And today they said on Twitter, in the last year, we've helped leading wallets scan 200 million transactions, block 20,000 malicious ones, and keep over 500,000 Web3 users safe. Today, we're launching a free security browser extension, BlowFish Protect, to make transaction security accessible to every Web3 user. Now, the closest, or I guess I mean, I shouldn't. Yeah, no, it's a competitor. The closest competitor to BlowFish is Harpy. So these are these tools that basically allow you to essentially protect yourself from getting caught in signing a phishing transaction, for example, or doing something malicious like that. And it also, I believe, has some features, has some similar features to Fire as well, which it'll show you what exactly is happening with the transaction or what is going to happen with the transaction by running a simulation on it. So this is really cool. Like I'm a firm believer in there not being, I guess, monopolies in this ecosystem, even if in the end a lot of things trend towards looking like monopolies, because I think the more competition, the better. You know, it's funny because even Uniswap, which I consider to be a pretty strong monopoly in the AMM space, they had competition from SushiSwap for a little bit. And you may not believe that if you came later than DeFi Summer, but SushiSwap was regarded as an actual Uniswap killer, and they actually did end up pushing Uniswap to do their token earlier than anticipated to fight back. So competition is really good. Competition is really healthy for this ecosystem, I believe. And it's really great to see that there's another, I guess, tool out there that's going to be competing with Harpy, because it means that it's going to make Harpy a better product, BlowFish is going to be a better product, and at the end, users get the benefit of that as well. So yeah, you can read BlowFish's thread here about how they do things. It's very similar, as I said, to Harpy, and I believe that BlowFish started on Solana and not Ethereum, but they are supporting Ethereum and Polygon right now. But that may be a reason why you hadn't heard of it before as well, because it did start off on Solana and has come across to Ethereum. At least I believe they started off on Solana from what I've seen, and they came across to Ethereum, and obviously we'll be supporting all the layer 2 chains and everything on Ethereum as well. So I'll link this in the YouTube description for you to check out. All right, last up here, I just wanted to highlight an explainer that Dankred Feist wrote about Rye. So Rye, I think, is still one of the most least understood things in the crypto ecosystem. It is, as Dankred says here, one of the coolest experiments in crypto, but unfortunately, it has suffered a lot from the, I guess, capital inefficiency problem, which means its adoption has suffered here. So you can read this blog post for an overview of Rye, of what Rye is, why Dankred's excited about it, and why you should be excited about it as well. And the piece was reviewed by Vitalik Buterin and Amin Soleimani. Amin is one of the, I guess, I don't know if he's a co-founder, but he's definitely one of the architects of Rye. So this post is definitely high quality. I mean, I read through it and I really did enjoy it. And I've talked about Rye plenty of times in the past as well, so I won't rehash what I've said there, but definitely go check out this blog post for yourself. It'll be linked in the YouTube description below. Now, I did say this was the last thing I wanted to cover today, but not the last thing I wanted to talk about today. So we're back with a bit of market action again over the last, 48 hours or so, with the market spiking up again and everyone being like, oh my God, the bull market's back. Oh my God, the Fed is hawkish. They're not going to raise rates again or something, or the Fed's dovish. I don't know. Like, everyone's throwing around all these terms all the time about the macro environment, and it's just hilarious seeing how concerned people are with what the Fed does, when a year ago no one even gave a shit about the Fed, right? They were all trying to fight the Fed, so to speak. But it's kind of funny how things change like that. But the reason the thing I want to talk about when it came to the markets was, again, just rehashing a lot of what I've said in the past about not getting ahead of yourself, making sure you stay grounded with things, making sure you're making the most of the bear market, the sideways market, the crab market, whatever you want to call it, because even though the market may be bullish right now, right? It doesn't mean that a new bull market is happening, right? It doesn't mean that a new bull market is necessarily happening this year. These things can happen a lot, and as I've explained before, they did happen a lot. They happened in 2019. Go look at the ETH chart of 2019. It's a very brutal chart when you look at it, because it tricked a lot of people into thinking the bull market was back. But just, yeah, keep your head level here. Keep your eyes on the prize, and I think you'll be okay. Now, the second part of this, before I wrap up today's episode, was I was looking at kind of what was moving in the market. and I was looking at different sectors, and it seems that the layer twos, at least the ones with tokens, seem to be moving quite a lot in terms of price, and also the apps built on top of them seem to be moving quite a lot as well. And the layer one seem to be quiet, which is pretty cool to see. Now, I don't know if this is just a short-term phenomenon, but I like the fact that these L2s are gaining in value, because these L2s, to me, I mean, are worth much more than the vast majority of these L1s, and they should be worth a lot more. But at the same time, I can't just say that and not look at the project individually. Like, for example, I mentioned before, I'm an investor in Optimism. I got a rather large OP airdrop, which I'm still holding, but if you actually go and look at the amount of tokens that are circulating for OP, it's only 5%. There are still 95% of those tokens that are not circulating, or around that. I don't think it's an exact percentage, but around that. So OP is one of those tokens that have actually been going up a lot recently. People have been getting really bullish about, and it now has a pretty large fully diluted valuation. I believe over $10 billion, I think, probably a lot more than that now. So when I look at that, I'm like, okay, well, and this is another reason why I don't really talk about specific tokens, because I look at that and I'm like, okay, well, I'm really bullish on Optimism. I am an investor in OP, obviously, because I'm bullish on Optimism. I think a lot of the things that they're doing are really great. I do think that OP as a token is going to be worth something. I don't think it's going to be worthless. I do think that it is one of the better tokens out there. But then looking at the supply dynamic right now, and I'm like, okay, well, 95% of the supply is still not circulating, and we've seen what happens in a lot of those, in a lot of different cases around that. So I see that, and I'm like, okay. This is anyone's guess of what can happen from here. I have my opinions on it, which I'm not going to share. I mean, I don't know what's going to happen. I just have opinions on it. But this is the number one reason why I don't ever talk about, or I try my hardest not to talk about, individual tokens, because it is really hard to pick things. I mean, for example, look at what happened with Aptos over the last few weeks. Aptos has basically no ecosystem. It is VC infested. It's basically like everything that is wrong with the L1 space. It is more centralized than Solana and Definity, which are already very centralized. And yet it pumped to a fully diluted valuation of, I believe, $20 billion, where I think 90% of the tokens still aren't circulating. And the tokens that aren't circulating are actually allowed to be staked, and there are rewards going to those stakers. And a lot of those stakers are the VCs, and they're allowed to sell their rewards. So you see what I'm saying here, right? Like, I personally looked at Aptos and was like, okay, that thing's, you know, kind of like finished. It's already worth a lot. It should be worth way less than what it is now, if we're talking about fundamentally speaking. And then it did this ridiculous pump, and no one really knows why. Apparently, I think the Korean market was bidding it up or something like that. I didn't really look too much into it, but this is why I avoid these topics generally, but also why crypto investing is so hard. It is so hard, guys, and it's why I tell you guys, really just think twice about going on leverage. If you really want to go on leverage, I mean, it's your decision, but leverage will kill you. Shorting things is usually not very fun. Longing things is usually not very fun, like on leverage, obviously, because you can blow you up very, very quickly. Even though, you know, you might be bullish on something, it doesn't matter, right? Maybe you're bullish on it over the long term, and then in the short term you get liquidated, and then you're out of position, and it's even worse. So there's so much that goes into this stuff. You can't just look at one factor over another, and sometimes things just pump a lot for no reason, or for stupid reasons, or they front run their price discovery. And this actually happened with Chainlink. So Chainlink, last bear market / crab market in 2019, did a pretty significant pump against pretty much everything, but then during the bull market, it didn't really do much against other things. It definitely went up against US dollars, but against ETH and BTC, it didn't really do much at all, because it front ran that price discovery, and it basically priced in all of its future growth. I think that's what happens sometimes with these assets. I think that may be what happened with Aptos, but Aptos just seems to be such a weird scenario where, as I said, 90+% of the tokens aren't circulating. It seems to be led by a Korean exchange called Upbit. No one really knows about it. No one really has really talked about it that I've seen. There's not really any ecosystem or community there, and there is constant sell pressure from those VCs, and it is a VC kind of like infested chain. So yeah, when looking at these things, you have to take so many different inputs in, and you have to try and make informed decisions about what you invest in. And a lot of the times you're going to see things go up in value, and you're going to miss them, and you just have to deal with that. You're not going to catch the majority of things. You have to have your thesis, invest where you think is the best and most efficient use of your capital, and then be happy with that. And then if you want to change your thesis, you can, but when changing it, you have to like change it and not have regrets, because then you just keep flip-flopping. Because what happens is you're like, okay, well, this thesis didn't play out. I'm going to go and trade this asset for this other asset because I have a thesis on this one. And then the one that you traded out of starts going up in value. And you're like, oh my God, no. And then you try and chase that again. And then that's another way to whittle down your stack and whittle down your any money that you've made in crypto. So yeah, anyway, enough of I mean, it's not investment advice, but enough on that front. Just wanted to put that out there because it's something that I've been thinking about over the last few weeks for a little bit. But on that note, that's going to be it for today. Thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.